Hello, everyone. I'm Matt Clark, research analyst with Money Markets, here with your weekly Bull and the Bear podcast. Now, if you haven't already, I do want to make sure you're subscribed to our YouTube channel. This is where you're going to find a lot of great features with chief investment strategist Adam O'Dell, Green Zone Fortunes co-editor Charles Sizemore, and myself each and every week. Also, check out moneymarkets.com. It's your home for safe, sound, smart, simple, profitable investment information for your portfolio. On the website, you can build your own watch list of stocks, track their Green Zone ratings performance, and all sorts of things, and you can do it all for free. Also, I do want to mention that we do have a premium investment service called Green Zone Fortunes. This is where Adam, Charles, myself, and our entire team work hard to give you our best stock recommendation each and every month. We also provide a lot of great analysis and tons of tools on there that you can use. And we'll put a link in the video up here somewhere where you can get more information on how you can join our community at Green Zone Fortunes. Now on with today's podcast. In the fourth quarter of 2021, Bitcoin, which is the most prominent and talked about cryptocurrency, reached a value of about $65,500 per coin. And it's the largest that Bitcoin has been valued since its inception in 2010. But the last 2 months has not been kind to cryptocurrencies as the Federal Reserve has become more hawkish. The Omicron variant of the COVID-19 virus is continuing to rage across the world. And it's making investors much more cautious with their investments and more risk averse. That risk aversion caused the price of Bitcoin to fall 35% off its November 2021 high. The price actually dipped below $40,000 earlier this week, and other cryptos have fallen just as hard and just as fast. There was a rebound midweek, but with rising inflation, which actually set a record, and uncertainty related to high growth tech stocks, which crypto trades pretty close to, doesn't signal that this rally is going to sustain or push cryptos to new highs anytime soon. However, my dive into the crypto space has uncovered different ways to invest in this emerging market that isn't necessarily the high profile names that you're used to hearing. Now, I want to talk about that, but I want to start by giving you my reason into why I'm diving deeper into the crypto market. In the most recent episode of our video in the series Investing with Charles, Green Zone Fortunes co-editor Charles Sizemore and I talked about our investor resolutions for the new year. Now, my resolution involved cryptocurrency. I won't get into too specific of details as to what that is. You can check that out on our YouTube channel. Let's go to our YouTube channel and go to our most recent Investing with Charles video, and you can find out more about it. But regardless, I've been doing a lot of digging because I want to learn more about crypto. And the recent sell-off in the crypto market has given me pause to really look even deeper into the market to find ways to potentially profit. Now, first off, the sell-off from December to January in the crypto market has not solely been put on Bitcoin. Ethereum, which is another popular cryptocurrency, hit a high in November of 2021, right around the same time that Bitcoin did. But like Bitcoin, Ethereum experienced a strong drop in December and into January. And as of this recording, Ethereum is nearly 30% off that high, but it dropped as much as 35% before gaining some ground in the midweek. But again, I'm not sure that this rebound is permanent. The Fed's potential rate hikes coming is putting a lot of pressure on growth stocks like tech, and risk aversion with investors is going to continue to grow because of it. But that's not stopping me from my quest related to cryptocurrency. And it led me to a relatively unknown part of the crypto world that could bring a solid investment to your portfolio. That relatively unknown part is what's called decentralized finance, or DeFi. Now, in simple terms, DeFi is financial services without the middleman. Using DeFi, which is currently mainly hosted on the Ethereum blockchain, means you can do just about anything that a bank can support without the bank. This means you can earn interest by lending out crypto and drawing interest or rewards on a minute scale rather than on a monthly one. You can actually earn interest by the minute rather than by the month. You can borrow and lend money involving crypto. You can trade derivatives and assets because it basically uses a peer-to-peer system, meaning you trade from one person to the other. That's it. No one in the middle. Think of it as buying stock without using a brokerage. And with derivatives are basically stock options or futures for crypto that you can also trade and buy and sell peer-to-peer. So it makes the process much faster. But again, you're not trading equities. You're basically trading crypto. DeFi provides the faster way to do those things, as I said. And with cryptocurrency, the transactions are between two people and without a broker. Now, it takes the concept of digital money and has the potential to create a digital alternative to Wall Street. And the use of DeFi has increased dramatically since late 2020. in comparing the market cap of 20 DeFi tokens. These are basically tokens that are built on an existing blockchain used by a specific platform, and the market cap of 48 cryptocurrencies, which is basically an asset of a blockchain. The DeFi market share of the overall global crypto market doubled from September 2020 to September of 2021. Now, DeFi tokens, like I said, are used in specific decentralized financial apps, or DApps, where cryptocurrencies are built directly in the blockchain software and can be used across multiple platforms. The movement of the value of DeFi tokens are expressed in how they're used in what's called smart contracts within the blockchain. These smart contracts are basically the financial transactions. DeFi's total value locked, or its market size, expanded by $100 million from April 2020 to March of 2021. Now, there's a specific token that has seen a nice rise in value at the same time the broader crypto market has fallen. It's called the Curve DAO, or CRV. Now, the Curve DAO token powers the decentralized exchange called Curve. The platform and token were launched in August of 2020 to a lot of ballyhoo and hype, but that hype faded and the Curve DAO token lost a ton off its all-time high. But a new partnership with the Ethereum-based protocol Yearn.finance has started to push investor interest in the token even higher. Now, the price of CRV jumped to more than $11 when the platform launched in 2020, but it dropped dramatically in the months that followed, down to actually around 40 cents. Now, since July of 2021, however, that price has mounted a strong comeback, and the partnership with Yearn.finance has pushed Curve to a new 52-week high. It's gained a total of 1,115% from its 2020 lows. That's pretty impressive. Now, since it's not a stock, there's a different approach to earning money with Curve. The first step you have to take here is you want to get an online account. Now, you basically want to find a broker that supports Curve DAO trading. You could look at like Coinbase or other larger brokers that are specific in the crypto space and the blockchain space, and you want to open an account. This allows you to buy, sell, and trade tokens using that broker's platform. But again, you want to make sure that they will support Curve DAO. They don't all do that. So you want to find a brokerage or a platform that supports Curve DAO. And after that, you want to open a wallet. Now, this is only in the event that you don't plan to be actively buying or selling your Curve tokens. The wallet's basically a way for you to store your crypto or your tokens securely. And there's a couple different wallet options out there. There's hard wallets and there's soft wallets, a lot of different things out there. I would encourage you to open a wallet regardless of whether you plan on actively buying or selling or trading, just on the safe side to store your crypto regardless. And then after that, you can basically start trading. Once you set up your account, you choose your storage, you can start trading CRV on the platform that you elected to open your account on. It's very simple, and it moves just like stock. You look at the price, that's the price you're going to, the current price is the price you're going to buy, sell, or trade that particular asset. And there's much more involved to it than that in crypto and in tokens. So this is just a top level view of it, but don't be scared of it. But you do have to remember there is a deal of risk involved with trading crypto and using DeFi. There's a lot of volatility. And you can see that just in the massive price bounces that we saw in the three assets I talked about earlier in the podcast: Bitcoin, Ethereum, and Curve. Now, I'm trying to learn as much as I can here so I can fulfill my investor resolution. And using traditional equity analysis coupled with the increase in DeFi popularity, Curve may be one of the best places right now to get started in your crypto experience. Now, if you have a question about a particular stock or a sector that you'd like myself or Adam or Charles to take a look at, we would love to do that. You can email us. That email address is feedback@moneyandmarkets.com. We'll flash that email address right down below here because we love to see your feedback. We'd love to answer your questions, and we do so as much as we can. If we do use your question, or maybe you send us a video of you asking your question, we use that. We're going to send you some very cool Money and Markets gear, kind of like this t-shirt that I have on here. We've got sweatshirts, hats, a lot of other stuff in the pipeline. So make sure you send those questions. You can also comment down below here on YouTube as well. And we'll get your contact information and we will ship that stuff out to you as soon as possible. Now, also, I do want to make sure you head over to moneymarkets.com. You can sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable investment information from myself, from Charles, from Adam, and from our entire team. And we do it every single day of the week. And while you're there, make sure you check out our proprietary Green Zone rating system. You can use our metrics to get the ratings of thousands of stocks that are on the market. Just go to the website, moneymarkets.com, type in the stock in the search bar in the top right corner of the website, and you will be able to see our ratings on the stock, some fundamental data, stock chart, a lot of any content that we've written about these stocks, and you can even add stocks to your own personal hot list on our website. Oh, and did I forget to mention that it is completely free to use. So that's all for me this week. Again, Curve, DAO, CRV. Check it out. See what you think. It could be a great way to start your crypto adventure. Until next time, this is Money Markets Research Analyst and host of the Bull and Bear Podcast, Matt Clark, wishing everyone safe trading.